sector about the impact of the coronavirus on New York City retail property, leasing, tenants, landlords, brokers, and others. The situation is extremely dire, yet those who lived through or read about the oil crisis of the 70s, the S&L failures of the 1980s, September 11th, and the 2008 recession have seen the city come back. It's the painful question of how and when. I'd like to introduce the panel today. We have a significant retail landlord, Jack Terzi, owner of JTRE Holdings. We have an attorney with deep experience in retail, Morris Missry, managing partner of Wachtel Missry. And 4 brokers with long experience in New York City retail, Robin Abrams, vice chairman of Compass, Lon Rubackin, senior vice president of CBRE, Brad Mendelson, vice chairman at Colliers International, and Jacqueline Klinger, a partner with SCG Retail. We're going to get right into discussion, but if you have any questions for our panelists, feel free to use the Q&A button at the bottom of the screen. And if we have time, we'll get to some of those at the end. I'd like to start with Jack, who's on the front lines of this crisis as a landlord. What are you hearing from tenants, and what are you asking and hearing from the banks?
Hey, Adam. What am I hearing? Really, I'm hearing everything. The current situation, in my opinion, is as bad, not worse, than anyone could imagine at the current juncture. I mean, I don't think people are really appreciating the trickle-down effect this will have throughout our industry, at least from a retail landlord's perspective. I have a gym in my property. State shuts down the gym. The gym then says, Jack, I can't open for business. How can you expect me to pay rent? Now what do? I need your help, he tells me. But I'm not a REIT. I'm not a big fund. For lack of a better words, I'm a mom and pop landlord. I have a bank to pay. If I don't get rent from the tenant, I can't pay. So the real question is, what is the bank going to do? We need help from the banks, help from the government to say no debt service in 90 days. If that happens,
have you, when you speak to the banks, what are they telling you right now, like today, yesterday?
Look, my number one priority, Adam, is the tenants. If not for the tenants and more important relationships that I've cultivated with them, I'd be out of business, which would help me get to where I am today. It's critical to me to support the tenants. We have very symbiotic relationships. I have phenomenal tenants in my portfolio. Just an example, a restaurateur called me up yesterday. They pay rent every single month on time for 7 years. They called me crying, basically, and not in a way where they're looking to take advantage, but asking me for advice, saying, what should I do? How do I handle this? I have reservations booked out for the next 90 days. I took money in on catering events. And look, I said, of course we're here to help. You know where I am right now? I mean, you might not want to hear this, but I'm the only guy here. I'm in my office alone right now, trying to put together my own stimulus package for the tenants, and then I'll deal with the banks later.
Well, let me jump in with
there's no rules anymore.
Let's move on to here. Just hold it so we can have other points of view and just hear from other voices. Morris, I wanted to ask, what from the attorney's perspective, like what from the legal side, what are you hearing? Same question. What are you hearing? What are you doing?
So let me just touch on a bit of what Jack just said. You know, we have different lenders and different lender pools out there that we have to deal with. And I've spoken to around 10 lenders. I've spoken to around 10 tenants and around 50 of my clients. And the lenders, you have your balance sheet lenders like the banks, who I think are realistic, who are willing to work with us, who understand the asks, which are moratoriums on payments. Some lenders are looking for proposals. And some lenders are saying, let's wait a week or two, let's see what happens, because the next payment date is not until the beginning of April. Then you have your CMBS type lenders, securitized lenders, who are run by servicers, and you can't get in touch with anybody these days. So what will happen there is you have to stop making a payment. They'll put you into special servicing, and then you pray to God that somebody will answer you.
Is anyone starting that yet, or?
Not yet, because usually payments are due the first week of the month, but people are proactively, landlords like Jack are proactively reaching out to their lenders and saying, we need some help, our tenants are moving out, our tenants are going dark, and we need some help. That started the past couple of days. So we don't anticipate anything to happen on the CMBS side for a couple of months. The third group of lenders are generally the funds or the REITs who are making loans, and you can pick up the phone and speak to them, but they're saying, let's wait a week or two, a month, let's see what happens. But we want you to make your payments because we lent you the money, you're making the profits on the deal, and we're counting on you to do the right thing by us. So it's a very difficult situation right now. Jack is right. It's probably the most difficult situation I've faced in 30 years. And I've gone through 3 different recession-type events. This is by far the most uncertain. So we have to deal with it. We have to be patient. We have to be calm. And as I've told my clients who've called me, communication with the various constituent partners is the key. Whether it's a tenant, whether it's your landlord, whether it's your lender, we all have to be patient. We have to be mindful of what's going on, and we can't panic.
Okay, let me move on. Thank you. Just very frightening, basically. Robin, what are you seeing? We're talking to the tenant. I mean, you're sort of in between both the tenant and the landlord with deals that are happening. What's going on with those?
I would say starting Monday, Friday, I had emailed you. We were out on site tours with international tenants, and I think everybody was still hopeful. And then, of course, hit the fan on the weekend, and Monday the phone started to ring. And I think we were hearing from landlords that were pragmatic in taking the approach that Jack mentioned. They had multiple tenants, restaurants in particular, that were good long-term tenants and for whom they wanted to offer support. And so ideas were traded with regard to waiving rent for a few months, taking that rent and deferring it and putting it towards the end of a lease so that if the tenants continue to operate and were successful, they would eventually pay back the rent for a course of time or percentage rent. So I think landlords are all starting to address this.
It's Missry, yeah.
Well, we got calls from co-ops, on the other hand, that said we can't afford to do that. We have, operating costs, real estate tax. So I think it's going to depend on what they do. But I do, on the other hand, we have tenants for whom we've already sent formal letters today and reached out, and they are asking for some form of rent relief because they've shuttered stores. So I think, again, landlords and tenants are going to have to work together to make some accommodations for the short term in order to allow these tenants a potential ability to operate long term and honor their lease obligations. Otherwise, I think we're going to have a huge disconnect with a lot of misery.
I'd like to ask Brad. Well, first, if I could ask everybody while you're not speaking, if you can see on the lower left, there's a mute button there. And if you're not talking, it'd be best to hit that. So then it stops all the sort of noise that's happening. So Brad, what I'm interested in is talk about a lease that's actually in progress that you thought was going to be done in a month or 2 months. What happens?
We had a lease out for signature in a space on 18th Street. Very prominent restaurateur. He called the landlord. He said, I'm prepared to finish the lease, but I'm not going to sign it until this whole thing's over. And the landlord said, I understand that completely, and that's what we're doing. And he'll wait until it's over. He wants this tenant. In his building, it's the tail that wags the dog. And I had another transaction, which was quite a large one, where the rents were in the $19 million range. They called up and said, we're out, done. All their backers wouldn't put any money forward at this time. And their opinion was that the levels will be less when this thing's finished. Whether that's true or not, I really don't know.
So they're just understand they're not pulling out of the whatever their concept is. They're thinking instead of 19, maybe we can get this at 16 in 3 months or 6 months.
No, they're out.
Oh, totally.
Yeah, they're done. even if they came back at the number they wanted to pay, the landlord couldn't do that because he's got too much financing on the property he couldn't afford to carry. So you have some issues there. I think you're going to see, we have 3 or 4 other deals that are sort of just standing still, waiting to find out what's going on. And being that there's no one standing behind most of these deals because the market was quiet anyway.
Hold on, Jordan.
Is someone talking?
Someone doesn't have a mute on their microphone, but
You know what, Adam? People are really having a hard time hearing because there's a lot of background noise. We're getting a lot of chat about that. So if you are not talking, please mute yourself.
I think the people in the audience have to mute their phones.
Yeah.
they're muted. They can't.
It's not the audience.
Okay. Anyway, did I answer your question?
Yeah. Yeah.
It's problematic.
So I'd like to turn to Lon and kind of the same situation.
I got my first call Monday morning around 9 o'clock, which surprised me how fast it came. It was from a movie theater chain we're representing, and the ban for theaters hadn't gone in yet, but most of the municipalities we're trying to limit to 250 or 50 people wherever, and the company wanted to know what would be the best way to approach their landlords from my perspective. And the first thing I told them is to compose a letter and let them know exactly where you stand, that you are a long-term tenant, that you want to do the right thing by them, but yet your business is greatly impacted and you'll be coming to them for some sort of help and relief, but that, today being Monday morning, you definitely want to let them know and put them on notice that there will be things coming down the pike. 2 days later, Wednesday, it seemed like a year later. And every few hours, let alone every day or two, there's new developments. And unfortunately, most of them are not positive. They're on the negative side. So my opinion is that we're going to all have to sit on our hands for a little bit and see what the government really does. And it's very hard for us to sit there and say, well, we could do this, we could do that, whether it's Jack, whether it's Morris as an attorney. It's too fluid a situation, and it's changing minute by minute.
How is anyone? Well, actually, Jacqueline, let me ask what's been your experience on this with in-place deals?
Late as Monday morning, it had been a deal we'd been working on for a year, and the tenant signed the lease Monday morning, which I was a little bit surprised about. But at the same time, a lot of these companies, like especially on Monday, I think it's so early. I mean, I know like so much has happened in the last 48 hours, and the 48 hours of time, because so much is going on and so much is changing. And so that's the scary part. I mean, I've also had deals stall, and I also, represent Whole Foods, and they're rolling. I mean, they're like, they're as busy as they can be. They can't even, keep they're trying to figure out how to keep like the shelves stocked. So, I mean, I think it is really early to tell on all of this stuff and how many deals are going to die. But I think I don't know. It depend on how long it goes on for. They're tenants that need their pipeline, and when they let go of that pipeline, that's a really scary situation.
Adam,
If I may,
Sure, Jack. Yeah.
just to disagree a little bit with what Lon and Jacqueline were saying that earlier. Yes, the situation is changing every day, and every day feels like a month nowadays. But it's definitely not too early, and we know where this is heading. not getting better next week or the week after that. I'm having tenants call me up saying that they're having to lay off their staff and fire people and not even without paying rent. And I think that if there was a package and if we knew that we didn't have to pay lenders, for example, and then we can give rates to tenants, that'll change how tenants feel. I don't think it's too early.
Have you seen, is there any action in that? Like, are you talking to electeds or?
One of my tenants,
Adam, if I can ask Jack, I'm sorry, Jack, to that point though, how can you realistically offer a tenant something, a discount, putting the rent a year or two down the road, a percentage rent down the road, if you don't know what the government or your lender is going to give you?
Yeah.
I knew that I didn't have to pay my bank next month, and like Morris said, a lot of my lenders, NBS lenders, and home, the special servicer, then I can tell my tenant, okay, don't pay me rent next month, and we'll figure it out as we go along when we have some more of a long-term.
Yeah, I mean, so this is Jacqueline again. I mean, that's what I mean when back to what Lon was just saying. I just think it's too early in terms of like actual action. Jack is saying he's taking action, which is great. But, you know, my tenants haven't even like mobilized to reach out to all of their landlords yet. I mean, they're in the process of doing that. You know, while they're still some of them are staying open and trying to service the customers, like, you know, through delivery and online. That's what Sweetgreen's doing. Sweetgreen offered, you know, free food for all medical personnel, which is like a great thing. But, you know, I mean, in terms of, again, like I said, the biggest issue for these national tenants particularly is once they give up their pipeline, then it's a whole different conversation. You know, that's like throwing in the towel.
Can you explain what you mean by once they give up their pipeline? That's if they have.
So all of these companies, you know, or a lot of these companies have a certain number of deals they want to hit every year. And this is like, they have a timeline for it and it's fairly regimented. And once they say, oh, we're not going to sign these leases, they're kind of saying, well, it's just giving up the future. So everyone's kind of still holding on to it, which again, I think we're very early. So I'm not saying it's getting better next week because it's not, but I think that there's going to be like a lot to have to like come to terms with before they start saying we're not doing this deal. I think it's going to be more like what Brad is saying, like with his 18th Street deal, like a good tenant that wants a space that knows like they're going to try to say like, let's wait and not sign these leases. I don't think a ton of leases are going to get signed. I think my lease that got signed on Monday was the last of them for a long time.
I do agree. We've had a variety of things happen the last few days. We've had some people that want to mitigate because they are existing tenants, but we've had people in the market, some of whom have pulled out and said, we're absolutely doing nothing now. We don't know what we're doing in the future. But we also surprisingly got a proposal. We encouraged a broker, send it to us by email, give us 3 bullet points, doesn't have to be fancy on stationery. And we got an offer from a luxury brand for a Soho flagship. So I think some existing tenants that know that they need to relocate are making proposals. And we did talk to some e-commerce brands today, which shocked me, that said what Jacqueline's saying. They said, we have pressure to open stores. And what's going to happen is later we won't have used the monies that were budgeted and we won't be able to show projected sales. And so some of those tenants do want to explore options now when they think that they can push out possession dates and have really creative, flexible deals structured versus later when everything is hopefully stabilized and recovering and everybody's back in the market. So there may be some tenants that will now do deals.
What level is the rent? Is it kind of just what it was last week, or is it?
No, I think that the tenants are going to look to do deals that offer more incentives and that also give them more flexibility and protection with regard to timelines. Future possession or possession tied to certain things having happened or not happened, and maybe even cancellation provisions if things aren't what they're hoping they are.
I look at it a little bit
more
differently.
creativity. You'll see a lot more creativity in tenants negotiating leases these days. We've already seen it. We've had discussions with some of our clients. And what we're seeing is all the luxury tenants are closing down. Most of you guys who are doing deals with luxury tenants know that you've had to fly overseas to bring these tenants to the United States. They're impacted even more greatly than we are. If you walk down Fifth Avenue, it's a ghost town. And most of the tenants there sent their landlords letters that they're going dark temporarily, even though they have to continue to pay the rent. It's a ghost town now in Manhattan. And we're going to continue to see that for the foreseeable future because no one really knows what's going to happen. The only thing I will tell people is we shouldn't panic. We should keep calm because we have the fear of the unknown. I read an article by a psychologist, Art Markman, in the Harvard Business Review the other day. And he said it's really the fear of the unknown that gets us all panicky and anxious. And if we just wait, keep calm, analyze the data that will come through, we'll make the right decisions. And I'm telling my clients these days, just don't do anything. Hit the pause button, relax, think about taking a vacation, because this is a forced vacation. Don't get nervous. Don't overreact to tenants sending you go dark notices. Don't send them a notice telling them that they have to pay the rent. It's bad form. Just relax, take it easy, and things will work themselves out down the road. Nothing is going to happen right away. We don't know what the government is going to do. And to respond to your question before, Adam, we're having high-level discussions with people in the federal government about stimuli and stimulus packages that would benefit the commercial real estate industry. It's too early to tell, but we're fortunate that we have an administration that has their own interests to worry about. And
so what would you be asking? What would you ask for?
I think Jack touched upon it before. Just like the federal government bailed out the banks in the 2008-2009 recession, we're looking to the federal government to afford some stimulus package to the commercial real estate industry, either through banks, through a moratorium on interest payments, through some stimulus that would benefit our industry. Unfortunately, the landlords are the last ones to get any benefit. We see what's happening in New York State with rent control. We see and hear what's happening with commercial rent control. So we're hoping and praying that our discussions with the federal government and the Trump administration will yield some fruit. We don't know what's going to happen, but we're praying.
From the perspective in the local elected officials, are there, does this change their view of the way, their view of the commercial rent regulation? Because
I think it changes their view of the entire world and what's happening. I saw a podcast by Bill Gates. Someone sent me a WhatsApp message, and Bill Gates was talking about an epidemic of this proportion, I don't know, 5 years ago. I think it's going to change everyone's thinking on commercial real estate. My fear is that the Amazons of the world, become even larger because people are afraid to get out and people are afraid of germs, and this has some psychological lasting effect on people. That's my fear.
Is anyone seeing some new kinds of tenants that are like, is there somebody who wants retail space right now? Like Brad or?
I think it's a little premature, Adam, but for me and my group, we're kind of surprised. We've had 4 or 5 deals percolating over the last few weeks, either in advanced letters of intent or early stages of leases. And as recently, or as an hour ago, those deals are all moving ahead. No one has asked to be retraded. And I think a part of that is because they realized they got a good deal up until 4 or 5 days ago. And I think the market was correcting itself tremendously before this. There will be more correction, but how much blood can you get from a stone? So I think the smart retailers who have been active and as Jacqueline was saying, for tenants looking for deals, I think most retailers who have experience realize they were pretty close to the bottom, and landlords aren't going to be able to go too much lower. they'll be able to get some other concessions, but Jack, maybe you can answer that one better.
Well, is anyone seeing any kind of new tenants get in the market? Just, is anyone like, are there more pharmacies want to open up or some kind of?
So Adam,
Yeah.
the tenants that we've been dealing with recently, and the retail environment, as everybody knows, is a different environment today than it was several years ago. Our tenants like rock climbing places, entertainment type of places, food halls, gyms, those guys today are all out of business for the moment.
Right.
The tenants that we are dealing with that have not really changed course are drugstores, grocery stores, things like that. Those guys are still in business, but I know it's a retail panel, but the co-working business, forget it. I got 3 calls this week. I mean, that's its own disaster right now. This could be the nail that drops them all, even the guys with the money.
There are a lot of fast casuals that are in the market looking around. Right now, they're sort of holding to wait to see what happens, because I think they think there's going to be a lot of new availability after this goes through, because there's tenants that were teetering who won't be able to make it.
That this is just going to wash out anyone who is weak? Like that's
Yes, it'll wash out anybody who is weak.
What is your sense of, what do you, sort of looking down the line in 6 months, like, do you think Fifth Avenue will be like only 50% occupied, or like where
Fifth Avenue is only 50% occupied now.
So, you're right, I guess.
I've never seen more of it. I've been.
Problem with, you have a bigger problem with hospitality. The hospitality industry right now is dead, and
Right.
for the foreseeable future will be dead. And as everyone on this call, on this webinar knows, tourists drive a lot of the retail business in New York. So, the pandemic needs to end so that people, start coming back to New York. Then retail will pick up a bit.
I think that when this does end, you'll find that there'll be a lot of pent up energy for wanting to move ahead and start life all over again. And I think the tourists will come back. I know the St. Regis was 15% occupied yesterday. They're usually 80 to 85%. And the president's already said he's going to backstop the hospitality business as well as the airlines. I think there's going to be a lot of governmental backstopping in the very near future.
So I wanted to ask has anyone, this is kind of a vulture fund question, but is there, are they getting calls for people trying to pick up the properties?
Way too early.
Yeah, I agree.
Wouldn't they want to say, we can offer you a bridge loan or something like that, and then see if they can get in?
So the ones that would do that wouldn't do it at this stage of the game, but they would do it shortly. What you're seeing a lot of now, or what I'm seeing, because I represent a lot of purchasers, are purchase sellers. Purchasers are looking to hit the pause button. They feel like they should be asking for a discount on the purchase price. They're not doing it yet. Again, it's too early, but I anticipate that will happen very quickly.
What about contracts that are, I've heard there might be issues with that, like someone who had already put down a deposit and maybe wants to back out, and they might start litigating over the deposits to buy retail property.
Yeah, so if you have a binding contract and you don't have some type of force majeure or unavoidable delay provision, which gives you the ability as a purchaser to delay things, your deposit is at risk. And most contracts contain a liquidated damage provision, which essentially states that if you default on your contract, you lose your deposit. I think most sellers want to sell their property, so they'll give the buyers more time. But then you have a corollary issue, which is the financing industry right now. Banks are drying up. They don't want to lend right now. They're very afraid. The 10-year Treasury, has gone down precipitously. The market has gone down by 30 to 40%. So spreads are widening. Ironically, rates are coming down, but the spreads are widening. So we don't really know where interest rates are going to be tomorrow. We closed 2 huge deals last week, thankfully. We got in under the gun, or a week and a half ago, I should say. But we don't know what's going to happen in terms of financing going forward. So, everybody's just waiting to see what happens with this pandemic before they really transact. But purchasers are moving towards closing, but they're going to have a hard time closing on the financing. So, we'll see what happens.
I've got a question from Michael Wine, and anyone can pick this one up. Has anyone heard anything from the city about a real estate tax moratorium or other type of real estate tax relief? I assume that he means from the city.
So the city today announced, the New York City Department of Finance is not giving any relief yet to those who have to file real property income and expense statements, RPIEs. Those are due, I think, by April 14th. So there's no relief yet. Everyone's waiting for some relief, but nothing has been announced yet.
There were things in the news, and there has been talk about lots of different assistance. So ICSC is talking to Congress, obviously. We saw that Marriott's asked for $1.5 billion loan from the government. We know that the city is talking about suspending taxes and fees. And I know I have a board of director call with Rebney tomorrow, but Rebney is talking about potentially getting the city to suspend commercial rent tax and sales tax and give loans and grants. So I think all of those conversations have literally just begun. And, in the near future, we hope to hear some of these things being put in place.
So I realized I was talking to myself after Mara spoke about being in contract right now. I'm actually in the middle of this. I had a closing this week on a large transaction in New York City, and we have a hard contract up. And I called the seller. I said, guys, I'm not closing. He said, what do you mean you have a TOE? I said, I'm not closing. You see where the world is right now. I'm not telling you I'm not going to close in a month from now. But as a lot of you mentioned earlier, we just need to hit pause for a couple weeks, for a month, see where we stand. So like Morris was saying, it's not like, hey, I'll close for 10 or 20% less. I don't know what it's going to be. If the world is the same place, I'll close for the same price. If it's not, I'll tell you where I am. And, as I mentioned earlier, there are really, the rules of yesterday don't apply to today's world. So, yes, I'm hard and I have to close, but, the seller understands the situation. The seller said, okay, let's punt until April 15th and see where we stand at that point, because they know that my intention is to close, but we're just in a different world today.
What would be interesting, Adam, if we had a reprise on the webinar in a few weeks, and you can see the juxtaposition of where we are today versus where we are then. So I think you should schedule another one in a few weeks from now. All of my fans are asking for me to do that.
Both of them?
Check in. What could a landlord, or could someone claim force majeure? Isn't this like the definition of that? Something that's just beyond anyone's control?
Oh, you hit my sweet spot. Force majeure is a provision in a contract that deals with acts of God. So my clients are calling me, both landlords and tenants, and asking me, how does the force majeure provision in the lease or the contract impact me? So from a landlord's perspective, a well-written lease will say that a force majeure event, which may include a disease outbreak, it may include a pandemic, which it generally does not excuse the payment of rent. So that's food for thought for landlords. From a tenant's perspective, a force majeure unavoidable delay provision should include these types of disease outbreaks, civil disruptions, closures, state of emergencies. And that's the rub. You try to negotiate that for a tenant, but many times a landlord says, like Jack says, like all of my clients say, I have to pay my mortgage, and try to take out business interruption or other insurance to cover you in the event of a disruption. So as a corollary to the force majeure, we've been advising our clients about business interruption insurance, which currently does not include the pandemic. And most BI policies contain a specific exclusion for pandemics or epidemics. So one of the things that the government is working on now is trying to get the insurance companies to get rid of that exclusion and to honor the business interruption claims. That's one of the stimulus things that we can avail ourselves to if the government acts quickly and decisively.
I've got a question, particularly.
Adam, we're actually working on a lease now that,
Yeah.
thank God, is not affected by this. And the tenant came back, the lease is out for signature, and they came back and they said, we have a comment. We need to put a pandemic clause in this lease. So I think you're going to see that, as Morris will tell you, in many leases going forward.
What were they hoping? Is they would put that clause in, they would no longer have to pay rent, or they would?
Look, as Morris said, right now, force majeure does not really apply in this instance to tenants. They now, at least in this one specific tenant's case, they want to put in a clause that, most likely when we signed leases, 10, 15, 5 years ago, we would have all accepted as landlords a pandemic clause saying if that there was a pandemic that there'd have to be a clause or rent relief or something.
So Adam, a force majeure clause, the reason why we draft and we accept force majeure clauses, the reason we want them as tenants' representatives is because a force majeure or something beyond your control would theoretically give you an ability to delay the performance of an obligation. So if there was a hurricane, if there was a war, if there was an earthquake, that would theoretically excuse a tenant's obligation to perform something, okay, for some period of time. It's a negotiated provision in the lease. Most savvy landlords exclude from that provision the payment of rent. So that is what Jack is talking about now. Tenants will now ask for that all of the time. Landlords will fight them and say, we can't give it to you because we need you to pay the rent by hook or by crook. And then it will go down to negotiating with your insurance company to be covered for those types of things.
So I've got another question from one of the listeners, and this is interesting. Have you seen banks retrade on term sheets they've already committed to regarding acquisition loans? Like from the bank side, are you seeing that?
We see that every day. It's not, it's not necessarily relevant to today's day and age, but we could anticipate that it will happen more because of what's happened in the world today. But it happens all the time. When banks do due diligence and they find out that the income is not necessarily what you represent it is, or they find out another fact that the building needs more work or whatever the case may be, they will retrade on rate and on proceeds, et cetera, et cetera.
I would say it depends also on, the word bank, Adam. You have debt funds that are a major lender in today's market, and that's they're definitely going to retrade people right now because they cannot leverage their A position with banks the way that they used to. We got lucky. We closed a bank loan last Monday at 3% that I'm sure we wouldn't have been able to close today, although we did have a conversation with the banker yesterday, and he said, look, we still need to make loans to make our quarterly numbers, similar to what Jacqueline was saying with pipeline. Banks are in the same boat where they need to get money out.
Well, how are they going to, I don't know how they're going to do that. So Jacqueline, what other stuff are you seeing from tenants that are doing well right now? How are they looking to do new leases or just sitting still?
No, I don't think anyone's looking to do new leases as of like today. I did have a tenant call me, and they're a young small business that raised money, and they're like, we're still looking because, like, I think someone, maybe Lon said it before. There's money in the bank for some of these tenants. Now that like all these tenants are, taking money from various, whether, it's private equity money or whatever it is, they have money sitting there and they have to make deals. So I did have a call with a tenant yesterday, shockingly. Oh, Robin was talking about this, where they said, let's stay on top of everything, because if something came up, we need to make some moves. So, I mean, that is definitely going on. And of course, the grocery business, like I said before, is strong. So those leases are going to continue to move. We're not going to see any problem on those.
Are people still looking to expand? I mean, wouldn't they have a lot more leverage now to take a rent reduction, or to cut what they're negotiating?
Yeah, I mean, I think we had done, I have a few leases that are out for execution. Again, one of them was signed this week. The others, I mean, I would even have a hard time going back to the landlords and saying, hey, can we get lower rent now? I don't know. It's just not, I'm not ready to, the deals were pretty aggressive, and to go back to the landlords today and ask for more favorable terms, I don't know. It's going to happen, but it's. I think
they're going to be different.
Situation.
Different approaches from food tenants and grocery tenants in particular, who are now busy and their business is actually lucrative, than there are from apparel tenants who, for the most part, are shuttered, don't know when they're reopening. And there may be some guys, and I did say it, and it did happen today, that there are some of these e-commerce brands that do have money and do want to do deals. And so they're going to take a very cautious and hopefully risk-averse approach to locking in deals for future, because they do need to open. But I think that most of the apparel guys are now out of the market, trying to deal with short-term challenges to their business. We do have some restaurant deals that were pending. We gave best offers. We were told, oh, we have competing offers at better numbers. And we're now hopeful that some of the other players are out of the market and that our deals will progress. So I think with regard to food, there's probably a little bit more strength and activity than there is with regard to some other uses. Yeah,
and just to go off of what Robin was just saying, restaurants, that's where we really need to see. I mean, the market has softened a lot, but there are a lot of restaurant spaces where if it's a good, strong restaurant location, you have a bunch of people fighting for the same space, and the rents have not gone down to where they need to be. And so that's we are going to see a major correction in the restaurant. Ton of restaurants, good ones, are going to close because of this. And we need to have landlords understand that if they have a space and if they want to rent it to a good restaurant operator, they need to really come down in their rents more than they would for any other kind of tenant, just because of all the costs associated with operating a restaurant.
This is
or
kind
be
of related to
flexible
that.
and embrace profit sharing with percentage rent. Our deals,
exactly.
Lower base rent with hefty percentage rent.
Mm-hmm.
That's on street retail, where there's a percentage rent.
Yeah.
It's as a new thing, or that's kind of just a version of.
I mean, I think major restaurants that do significant build outs and are our guys are putting up the money to build out, and they're a credit signature. So it's a little bit unusual, and it's kind of, I think, something that most landlords, if they want a food use as an amenity, embrace. And so they worked with us on a lower base rent with a hefty percentage rent clause, and the expectation is based on other places that this brand operates that they're going to get their rent or more than their rent. Obviously, if business is bad, our tenants protected, and landlords hurt a little bit, but they still have a tenant at a low base rent that hopefully continues to pay.
Now, moving on to a construction question. This is from the listener, Doug Rice. He's asking, tenants are about to be hit with a side issue of construction firms having to shut down, and we anticipate that tenants may wish to be active in the market looking for deals, but there is a potential issue regarding build-outs. Anything on that?
Yeah. The a number of tenants who have signed leases recently won't be able to build their space because the construction companies are all shutting down now.
Okay.
And they're burning through their free rent because all these tenants get a substantial amount of free rent to build out their spaces, especially restaurant tenants. So you're going to see either tenants pulling out of deals that they've signed because they can't build their space. A lot of the leases that we do, we have personal guarantees that will go into place for the construction of a restaurant. That way the tenant, if he's a good tenant, doesn't have to put up a lot of cash security. They're going to use that to build their space. But I don't believe you can get anything through the Department of Buildings now anyway. So anything that's there sitting on their desks is going to be there until things come back to some normalcy.
Have you seen construction halt? I mean, I
Yes.
see construction on this, there's still some going on, but I
just went past the Ritz-Carlton that's being built in Nomad. There's nobody out there. That was this morning.
Construction hasn't yet totally halted. I've been involved with two situations where, because of the coronavirus, crews have been dramatically reduced. There's talk that if New York City imposes a sheltering ban or quarantine, that one of the essential businesses that will not be allowed to continue is construction. So I think it's slowed down already, like Brad said. There are skeleton crews in other jobs. There are no crews in some jobs and full crews in certain other jobs, but a lot of the construction workers are affected by this virus and are staying home because they can't take a chance.
And have you, Jack, have you seen any of your tenants stopped construction? Is anyone in that phase right now?
No, I mean, I think it's way too early to have, for this. This is only going on for the last 3-4 days. So, a lot of the discussion that you're having is talking about rebuilding the house, but the house is still burning.
Mm-hmm.
It's too early to say that people have stopped. I mean, right now, 4 days ago, we were in the city having lunch, talking about, is this virus real? Is it not? Today, there's not a soul in Manhattan. Right? So, like somebody mentioned earlier, every single day, a new challenge arises. So I think, of course, if the city shuts down, there's not going to be any construction crews. And, one by one, every single retailer closed down. When Apple announced that they were closing down their stores on Friday night or Saturday night, everybody, all the retailers then followed suit. And then Danny Meyer announced he was closing the restaurants. All the restaurants followed suit. So it's been the trickle-down effect with everybody. And I think by the end of this week, there's going to be no business. And next week's going to be a very rough week. And hopefully by the week after that, hopefully things start to get better, but nobody knows. And I think, the fear, like Mark was saying, is the largest thing going on here. Nobody really knows.
The unions, the construction unions are going to be the ones who dictate when they all shut down. And my daughter's engaged to a young man whose father owns a fairly large interior construction company. And the union is cutting the hours of all the workers and, as Morris said, making the staff very sparse.
Yes. I have a question. This is kind of a group question, but from James Haddad. He's saying, is there a way to aggregate the collective leverage of multiple landlords with each bank to maximize our ability to extract concessions from financial institutions?
Way over my head.
Jack, anyone talking about?
Yeah, I'm happy to band together. The trouble in the banking world historically has been, no bank is equal, and the CMBS shops are really who we have to go after, because historically they don't answer you until you're 6 months in default and, they're trying to foreclose. And then they say, why don't you call? And you tell them you've been calling the servicer for the last 6 months every single day. And they say, pay it or we're foreclosing. So absolutely James, I'm happy to collaborate with you. We're having discussions with banks and with fellow landlords and with lawyers like Morris. I think that would be a good idea that we'd all be on the same page.
Is there any sense that people are like, we've seen this movie before and there's no particularly
Nobody
bad-
has seen this movie before, Adam.
Let me answer the question, Adam, because we've seen the movie twice before. We saw the movie in the early 90s with the Resolution Trust Corporation when they took over banks. They sold loans and properties at deep discounts. In the late 90s, early 2000s, banks took a more measured approach. And during the recession, banks took a totally different approach by not selling properties, by not selling debt too low, because they knew that there was inherent value in the properties. I think today, if the past was instructive, we should just, again, take a pause, work with our banks. A bank like Signature Bank will work with you. They're very good people. Remember, they have your money. So they don't want to give away the money, but they'll work with you to make sure that everything works out for you over the long term. They've worked with my clients. Other banks have worked with my clients. But I think we have to look at the past to predict the future. And if we just take our time, communicate consistently and constantly with our lenders and our constituent partners, things will work out. That's
What do you say?
A workout is you continually communicate with your lenders and you work out the problems.
Brad, this is kind of a dark question, but when you're talking about Fifth Avenue is already half empty, where do you see, like, picture where retail might be? Like, do you think people are going to change uses on some of those strips or just the rents will come way down?
Well, the rents have already come way down. They probably have to come way down further. The last deals we did on Fifth Avenue were the last really big deals. We rented all. Someone's dog is barking. Anyway, we rented all the space at the St. Regis to the Swatch Group. It was about $5,000 a square foot. And at that time, there was no vacant space on Fifth Avenue. Now you've got the Gap. You've got, what's the one, not Victoria's Secret, the Limited's company that was at 712.
Well,
anyway, they've got 80,000 square feet. Ralph Lauren's got 24,000 square feet. These are spaces that are all vacant.
do you think it'll be $1,200 to $1,500 kind of thing, or?
I think it was 2000 when we did the deals with Uniqlo on Fifth Avenue. The rents were barely at $2,000 a foot. You had to sort of fudge them so it looked like $2,000 a foot. I think it's going to drop below $2,000. I mean, they're asking now for the corner of 54th Street, they're asking $2,500 a foot and they have zero interest. It's the old Zara space that became Massimo Dutti.
Mm-hmm.
I mean, Vernato's got a lot of vacant retail space that they're asking a lot of money for, even if it's half of what they would have been asking 3 years ago. There really aren't any new tenants in the marketplace, and it has nothing to do with the coronavirus. It has to do with the market got so overheated and went so high so fast that when tenants decided they couldn't afford to lose as much money as they were losing, they started to figure out how to close down. I think the same thing happened in Times Square with the Gap and Old Navy. They have that space on the market now for sublease, and they'll take half of what they're paying. There still aren't any tenants in the marketplace for those sizable spaces. I mean, you'll find some luxury tenants going to 2,500, 3,000 feet, all over the place. You'll find, like the McDonald's we did in the corner of 45th. These guys paid a very high rent, and they're paying a very high rent for the sign, but they're thrilled to have it because that's their showcase. There are a few tenants out there negotiating with us on our remaining space at 1530 Broadway. All food, all going to pay a lot of money, not as much as they would have paid 2 years ago, but 2 years ago, they wouldn't have been there probably. But they want to be where the tourists are, even though there aren't any now. I think everybody understands that once this thing blows over, tourists will start coming back to New York again. It's just going to take time. And anybody, by the way, anybody renting a store now is going to take them a year to build. So theoretically, you're out of the, we're talking to tenants at 1530 who are still talking to us, and they're food tenants, but they're having problems filling the shelves of their existing places. So our deals aren't dead. They're just hold until we get past this period.
And do you think, just for everybody, that there'll be a change in ownership happening? I mean, if prices are down sort of 50%, it might fall another 20%, and some people can get wiped out on. And what's going to happen with that?
Well, I think you've got some of the companies that loan to own will end up with space cheaper because they'll foreclose on it. And it might go right back to the original bank lender. But the banks don't want the real estate back.
Right.
They want to find somebody who will take them out of it. Isn't that right, Morris?
Absolutely, Brett. I mean, you have lenders that will take the spaces back, but most responsible lenders who are primarily lenders and not predatory lenders will work with you to figure out how to get you to repay their loan, what the takeout is going to be, and what's going to happen in the interim. So again, we're too early in the process to really, know what's going to happen. But if you just look past, if you look in the past and you see what happened during the 3 previous downturns, you'll see what's going to happen in the future here. We're just hoping that the government does something for our industry this time that they've never done.
Adam Itzlan, visible man at the moment. But to Morris's point, though, in every calamity, just like this one, fortunes will be made. There will be people who will come out of this with riches you can't believe, because they're sitting on the sideline. They're waiting for opportunities, and there will be great opportunities. And I'm sure Jack Tersey is now thinking about opportunities that will be arising, as are a lot of opportunistic people. And out of misery will come opportunity too.
Look,
The irony here, Adam, is that, as Lon just said, there'll be opportunities. Macroeconomically, our country was doing phenomenally well. We didn't necessarily see it in the retail industry in New York or in Manhattan, but the economy was humming along. We saw signs of certain things happening, at least I did, at levels a little bit above where Brad had just mentioned. But this is like an atom bomb that just hit us, and we're going to have to take a deep breath. We're going to have to wait and see what happens. And as my good friend Ray Levy once said, the ox is slow, but the earth is patient. So we need to take a step back, relax, take a deep breath, analyze the data that's coming in, and just chill out.
Well, on that poetic note, so I'm going to wrap it up right now. I want to thank everybody for spending this hour and talking about these issues. Please, for all the listeners, please send your questions and feedback. People have been sending it in already. We're actually arranging another retail panel for next week, and guests include Jared Epstein from Aurora Capital and others. We're going to post updates about coming webinars on this site and through email. I'd like to thank Heather Grossman, who helped produce this, and thank you all. Thanks for participating.
Thank you.
Thank you, Adam. Be well.
Thank you.
Bye-bye now.